When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast. Chip Nellinger is back with me here to talk about what's happening in the marketplace. Chip, how you doing, man?
Hey, doing good. Casey, how you doing?
I'm doing okay. Chip is with Blue Reef Agri Marketing out of Morton, Illinois. He's cool enough to come on and talk about what's happening in the marketplace. So we've had a bit of a reversal from what we saw last week. Last week things were getting kind of banged up. This week we had some pretty good moves across the board. When we start looking at corn and soybeans, cattle prices through the roof again, and hog prices just can't catch a break. So I guess, Chip, looking at what you see happening out in the marketplace, what's your synopsis of the week, I guess?
Yeah, boy, it's weather. We're in a full-fledged weather market in the grains. Very dry, especially in the eastern corn belt. There's been some rain around, but it's been very scattered, isolated so far. So we are definitely going to need some rain very quickly in especially the eastern corn belt. Here at midday on Friday, the one weather model, the GFS, which has had rain forecasted for the middle of the month for about the last week, went drier. The European weather model, which by the way has been more correct, has been dry as a bone all along. So we added some premium going home into the close on Friday. We had actually a nice close for the week and even the day. July corn ended up almost 30 cents off the lows from early morning, and pretty nice close. We're back 35 cents off the lows in new crop corn. Really we're 50 cents off the lows from 2 weeks ago in new crop corn. Beans shot higher too, adding a little premium there. So we're the start of a new month. The funds are a little bit back on their heels now, and so if we get much more strength early next week, the funds might be, subject to coming out of some more of their shorts and corn, buying this market, adding a little more weather premium. So Sunday night, Monday morning could get extremely volatile based on any changes in the forecast. That it's the only thing that the market's looking at right now, because it is starting to get serious. And, if we don't get some better rainfall, more general rainfall by, the middle of June, then I think the market's going to have to start making the assumption that 181.5 trendline yield is not in the cards anymore. It can still be a big crop, but the longer we go without rain in the eastern corn belt, the more we're going to start cutting into the top end of yields here. We probably haven't yet, but in 10 days, 2 weeks, if we don't get rain and there's no rain in the forecast at that point, then we are probably starting to really go backwards in a measurable way and taking top end out of the yield. So going to get really important, really critical in the weather here the next couple of weeks. I know myself included hate, and probably everyone else hate weather markets. Weather models change, looks like, sometimes twice a day, add rain, take rain away. So yeah, we're going to have a fun couple of weeks and a fun start to next week based on, potential weather changes one way or the other, for the worse or the better. It's going to have dramatic effect on price levels Sunday night and Monday morning.
Yep. All right, so as you're looking out right now, we're taking a hard look at what's going on in energy. So I've been paying attention to oil and kind of what's happening there. Oil is very, very stuck in this 70 to 75, maybe just a tick over 75 range, and it just slides back and forth, and there's no real, it's not very sexy right now, I guess is the best way to put it. So when you're looking at oil, what are you seeing there? And this whole recessionary thing that we keep hearing about, seems like that is a play that we just can't seem to get over, I guess.
Yeah, we saw a lot of weakness earlier this week, and I think a lot of that was not only in the energies and crude oil, but it kind of spilled over into the rest of the commodity markets too. So, earlier in the week we had some ugly markets, and I think that was tied to some economic numbers out of China that maybe made the market feel that maybe they were a little bit sluggish still in the economy in China, and that cast a little bit of a negative tone across everything. Now, late in the week, that kind of seemed to subside. We got the debt deal passed, and there was a little bit of renewed optimism here in the commodity markets and in the energy markets. To your point, it seems like we're kind of at fair value in here in the low to mid 70s. I think the market is still fearful of a slowdown, but the way some of these economic numbers have come out domestically, I think people are starting to think maybe we can hold this off into late this year, first part of next year, and at least seem to be on somewhat solid footing right now. But that is definitely going to be a bellwether, is what direction do crude oil prices go. OPEC's watching that closely. They've met a few weeks ago and kind of agreed to not increase production and maybe slowly decrease production. So OPEC might have a say in this before it's said and done. But as crude oil goes, it's a good proxy for how the world economy and the domestic economy are going to go, and it has direct implication on our grain markets as well, corn and beans specifically, due to ethanol and the renewable diesel program that we have kicked off. So, but we're holding together. The brakes get bought. We can't seem to rally, north of the mid 70s and north of 80, but we're kind of building the base in here, as sloppy as it is, and looks like low to mid 70s is fair value. And if the economy can continue to hold together, and there's better signs that China is kind of coming out of their COVID slowdown and gaining steam there, I think that there's probably some potential out there. But it's been a mixed bag out there, to say the least. Kind of partly cloudy, because we've spent some time under 70. That quickly gets bought. We rally back north of 70 towards 75. That gets sold. And I think we're just slopping sideways till we know a little more about how the last half of the year is going to shape up economically in China and the United States.
Yeah. All right. So you touched on the next thing. I want to talk a little bit about crush rates, and we see there. Seems like things are still plugging along. There's plenty of things headed over to the crush side of it. Ethanol kind of seems to be hanging on in that low 2 range there. I guess looking at those markets, what are your thoughts there?
Yeah, we're holding it together. The ethanol numbers, I don't have them right in front of me. They bounced a little bit this week. We did have a census crush report out. It showed a higher crush rate than what was expected. So the crush margins are still profitable. This biodiesel program, the renewable biodiesel program that a lot of these plants have come online, that looks like it's picking up steam, probably faster than what I expected. I think the benefits there, the economic benefits, and some of these subsidies have been taken advantage of, and some of these plants are coming online in pretty rapid order. And so that looks good. That's maybe one of the bright spots, is the biodiesel demand ramping up faster, higher than maybe what the market expected. Our exports have still been a little bit sluggish, but certainly from the renewable fuel standpoint, ethanol is holding its own, and the soybean crush margins are holding together to where that makes sense and profits, and that's a good part of our domestic demand, and that seems to be a bright spot right now.
Yep. All right. Last question here. Looking at the hog market, hogs having a good day today. They're up 87 cents. So don't have very many of those days where they get to be up. Seems like here of late. Looking at that, it is one of the more volatile markets out there right now, where they'll have a day like this, and then come Monday they might lose $1.50. So I guess looking at that, Chip, what are your thoughts there?
Yeah, we talked about this. I remember last week, this hog market's just been so brutal. All the uncertainty about this California Proposition 12 situation going on. It's caused some liquidation, some sow liquidation. worries about we're going to back, pork supplies up because California's not going to take them all because they're not compliant with their new rule. However, we stretch this market so far to the downside. Historically, you just don't see any futures market as oversold as what hogs have been recently. We've had a huge rally off the lows, huge, I say, basically $10 off the lows in essentially 3 trading sessions, 3.5 trading sessions in the hogs. We've corrected some of those oversold indicators. Little bit of a bright spot that maybe the worst is over. The funds have been big shorts in hogs, and at the end of the month of May and the start of the month of June, it looks like they maybe want to take some profits on those, and they closed fairly well. It's still going to take the cash and cutout rallying to hold this rally together and to add to the rally. Really a strange setup. 1st of June here, you rarely, I'm not saying it's never happened, but you've got the June live or lean hog contract. Take a quick glance here, couple bucks above, $3, $3.50 above the August contract. And so that is not typical whatsoever, and just shows you what a mess this hog market has become on the fears of these supplies backing up because of the California law there, that Proposition 12. So
yeah,
I'm hopeful that maybe since we had a good close for the week, that the funds could come out of some more shorts and give us another bounce in here the first half of next week. But, it may set up an opportunity if we get back into the mid to upper 80s, again, on some of these summer month contracts to play a little more defense, because I think the market showed you its hand, and I don't see a big change coming. I'm not sure how fast we can change the industry to comply with some of these strange regulations we've got right now, or how economic it is even to do it. I think some of the smaller independent producers, certainly farrow to finish in the Eastern Corn Belt, have decided, yeah, I'm done with it. I've been doing this 30, 40, 50 years, made a lot of money over the years. I'm done with it. And we've seen some liquidation. And so it remains to be seen how this is going to shake out, but certainly it's going to hang over the market for a while. The exact opposite in the cattle market. Cattle, new all-time highs, just screaming higher. Cash was sharply higher this week, $6 to $8, maybe more. Big week in cash, massive straight up rally in the cattle. So as ugly as hogs have been, cattle just screaming higher, but with high feed costs on the corn side, historically strong basis in many areas of the plains, high feeder prices. There's not a lot of profitability out there as you look out ahead in the cattle market. So we've got a little bit of a hiccup right now, even though we've got high prices and essentially all-time high prices in cattle. Doesn't mean that the cattle feeder right now is just rolling in money, because it's a margin game, and the problem is the feeders and the corn that they're buying offset these massive record prices on fat cattle. So there's some trouble brewing out there in the livestock sector, both hogs and cattle right now.
Yep, for sure. All right, Chip, good stuff as usual. Folks want to reach out to you and get more information about what it is you got going on over there at Blue Reef. What's the best way to do that?
Well, best way is just give us a call at the office, 309-550-7213. Would love to chat with you. Just give me a call and we can hash out your risk management plan and how you might be able to improve it.
Awesome. Chip, appreciate you being on the podcast, man. Have a good weekend.
You bet. Have a great weekend as well. And be ready for some fireworks on the weather, Casey. It's going to get interesting.
Looks like it, man. Looks like it. So I'm Casey Seaman with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and go to the video version of this over on the YouTube channel, which is the Moving Iron Podcast YouTube channel. Check that out over there. Go to Moving Iron LLC for everything Moving Iron related. And need more information about the Moving Iron Summit coming up here in Nashville, Tennessee. Send me an email at MovingIronPodcast at MovingIronPodcast.com, or all the information is right there on the site. I've said this before, but if there's ever a question you have for Chip or anybody else on here, send that to me and I'll make sure to ask that question. So if you got something like that, send it my way and I'll make sure to ask that question when you're on there. So with that, I'm Casey Seymour with Chip Nellinger. It's going to be some iron, folks. Out.
in the 21st century.